welcome back. We've got another technical insight today. We're coming live from Classic Street in Richmond. I've got David McMillan with us again today. And we're here to talk about median house prices. David, in the simplest terms possible, what is median house price?
Median house price, well, if you put 10 houses together and they all have their respective values, it's the middle value.
The middle value.
The middle value.
So it's not the average?
It's not the average, so it's not skewed by outliers, which is important.
Very important. And it's obviously a very important metric for investors.
Yep.
How so?
Well, everyone quotes the median house price because it's the most reliable statistic. The average would be skewed, and if we're using the mode, which is the other one, that's the most frequent occurring price. So we don't want to use that. The median house price is the indicator that everyone uses, although everyone has different ways of calculating it.
And that's a good point, a good segue actually. There are a number of different data houses out there at the moment.
Yep.
We've got REIV or real estate institutes around the country. We've got obviously CoreLogic, RP Data,
Yep.
And a number of others that
Yep.
are quoting very different median house prices for capital cities, suburbs, etc. Can you explain some of the different methodologies?
Yeah, it obviously depends on the time period. So whether they're using the median for the last 30 days, the last 90 days, even the last sort of 6 months. Some people use it that way. It also depends on the size. So if they're talking about the median price of Melbourne, and that's Metro Melbourne, how many suburbs is that? Is it 20 suburbs? Is it 50 suburbs? And so the other consideration too is the sample size of the sales. So the REIV may have a different sample size to RP Data, may have a different sample size to Australian property monitors. So that's why you get the differences. But if you're looking at year-to-year growth, you can't compare the RP Data median with the Australian property monitors median.
Or ABS.
Or ABS or whatever. You have to use a consistent source because hopefully they've had a consistent way of calculating that median price all the way through. The median price is just a statistic. It can't be used in isolation. Sometimes we find when it looks like there's an opportunity in a suburb, is that it's like in North Melbourne, say, there might have been a low volume of sales. So if you've got 10 sales, it's very different to having 100 sales and then looking at that median price. So be careful of a low volume of sales, be careful of a low sample size.
And for investors, why is it so important? I mean, for me, whenever I'm advising clients, I'm always looking for properties that are at or below the median house price.
Yeah, so that's a measure of market depth. Okay, so how liquid is that asset? So if the median price in a suburb is 500,000 and you're trying to buy an asset at say $1 million, there's going to be very few buyers that can step up to the plate and spend $1 million. But if you're at the median level, you know that that's where most properties are transacting in that market. That way, when you put that property back on the market for resale, you're probably going to have a greater depth of buyers. So that's why it's important. And the other reason is because on the cash flow side, if you buy a property that's very expensive, you're going to find it harder to get tenants versus something that's about the average in that suburb.
Yeah, absolutely. David, that's been fantastic. Thank you for your time.
Thanks, Heath.